In today's lesson, we'll be discussing about market structure. Market structure is one of the basic and most important thing you need to understand in the price chart. Market structure will make you to understand what exactly is the initial direction of a particular pair is doing. Market structure will help you to formulate your own strategy. If you don't understand market structure, you won't be able to trade your pattern or your strategy carefully. Whether you trade ICT, whether you trade SMC, whether you trade support and resistance, market structure is always needed. You need to understand it. And once you understand market structure, then you've understood almost 50% of the charts already. Hello everyone, my name is Bolu Trades, an experienced SMC trader. Before we move on to the class, I want you to tap on the subscribe button, switch on your notification so you get notified whenever another video is being posted on this channel. So let's get on with it. So in this diagram here, this is a market structure theory pattern. This is the theory pattern. In our next class, we'll be discussing about the live chart pattern. But first, you need to understand the theory aspects, how it looks like, before you get into the chart and start spotting it. So whenever you are being asked what is the market structure of a particular pair, what you need to understand is price will always do make a pull like this to the upside. Price will always make a pull to the upside. Then after making a pull to the upside, giving you a higher high. This very area right here is what we call a higher high. Then after giving us a higher high, the next thing to do is you want to always see a pullback. This is known as a pullback, which is known as what? Our higher low. And after our higher low, your next expectation is you want to see price breaking above this previous high right here. Your expectation should be price breaking above this previous high right here, then which automatically is going to give us what? A break of this previous high. You can call it a break of the previous high or a break of structure. A break of the previous high or a break of structure. Then after giving us a break of structure right here, then what next we want to see again is higher high, another higher high. Then after giving us another higher high, we want to see another pullback to the downside. After giving us this pullback to the downside, which is our higher low, then the next thing you should be expecting is you want to see another break of this previous high right here. You want to see another break of this previous high right here. One thing about break of structure, one thing you need to understand about break of structure is whenever you see a break of structure, it gives you a clear confirmation that price is still in an uptrend. And one thing you also need to understand is the trend is always your friend. You need to always trade based on the current direction of the financial markets. If you are trading against the trend, then you might get burnt easily. That is, you might get your money burnt easily in the financial market. So you need to follow the initial direction of the trade. So let's move on with this. Then what next we want to see is what? A break of structure. That is a break of this previous high right here. Then after giving us a break of this previous high right here, your next expectation now is you want to see what? You want to see another pullback. You want to see what? Another pullback. You want to see another pullback to you want to see another pullback to the downside. You want to see what? Another pullback to the downside, which is going to give us what? Another higher low. And after giving us another higher low and another break of this previous high to the upside, which gives us a clear confirmation that price is still in the uptrend. So that is for the bullish trend. That is also the same thing as the uptrend. Bullish is still the same thing as uptrend, so you don't get confused. Whenever anyone asks you what's a particular pair is bullish, then it means it's in an uptrend. So let's move on with the downtrend. So the same thing as downtrend is just vice versa. Uptrend and downtrend. Another word for downtrend is bearish. So that is the market is in a bearish direction. So what do we have here? We have a leg right here, which gives us what? A lower low. Then after giving us a lower low, our next expectation is we want to see what? A pullback to the upside, giving us what? A lower high. Then after giving us a lower high, your next expectation now is you want to always see a break of the previous low to the downside, that is a break of structure. You want to see a break of structure or a break of the previous low to the downside. Then after giving us a break of the previous low or a break of structure to the downside, which automatically this low right here becomes what, a lower low, then what we expect next is what, a pullback again. We want to expect another pullback to the upside, which is our what, our lower high. After giving us another lower high, we want to expect another break of structure to the downside to give us what, a clear confirmation that price is still in a downtrend. That price is still in a downtrend. So after giving us this break of structure, your next decision now is you want to see another pullback. There will always be a pullback because market does not just move in a straight now in a straight direction or without giving you a pullback. It will always give you a pullback, because if it does not give you, a pullback, then meaning a lot of people will be making money in the financial market. A lot of people will even be profitable in the financial market. But price will always give you what? It will always give you a pullback. Then after giving you this pullback again, you expect what? Another break of structure to the downside, which gives you what? A clear confirmation that what? Price is still in the downtrend. So this is just the theory aspect of how market structure looks like, how you picture a particular direction on a currency pair. This is exactly how it looks like. You need to understand where your higher high is or where your higher low is when market is in the uptrend. Also, you also need to be able to understand when price is still continue its initial direction to the upside or to the downside, meaning a break of structure. So what I want you to do now is I want you to repeat this video, move to the price chart, backtest, and see how this works perfectly. Because if you don't backtest it, then this won't be able to stick into your brain. You need to train your eyes to be able to understand it better. So in our next lesson, what I will explain now is we'll move into the live chart, explain how it looks like on the price chart. Have a wonderful day. Salute.